Let's now take you to the very latest in the world of business. The rand was at its weakest level against the US dollar in about a year this morning, as the expectation of higher interest rates in the US and the embattled Turkish lira kept the local currency under pressure. For an update on the latest business news, we're joined now by Jimmy Moyaha, who is an independent analyst. Jimmy, very good morning to you. Thank you so much for joining us. After closing firmer amid mixed global markets on Tuesday, give us a sense of how the markets have opened this morning.
Morning, Paul. The markets opened slightly weaker this morning. We've got the rand still trading a little firmer, though, with the expectation that we might see 16 rand yesterday we briefly touched the 1590 rand mark, as you alluded to. The top 40 is a little firmer, but it is still trading at all-time highs and isn't looking to push significantly higher at this stage, given how close we are towards year-end. The major sentiment drivers around the local markets, other emerging markets, as well as global markets, is largely centered around U.S. sentiment, following the U.S.'s decisions around tapering, following the expectation that there might be interest rate hikes in the U.S. Earlier next year instead of the planned 2023, and the fact that we are seeing a stronger performance out of the U.S. Treasury yields off the back of this. And this is sort of affecting other markets. It's filtering through to the gold markets as well. Some of what the U.S. is doing around the oil markets is also filtering through to the oil pricing as well.
As a result, will the rand reach its 16 rand against the US dollar anytime soon?
It could very well. It could very well reach 16 rand before the end of this year. As we said yesterday, it tapped close to about 15 rand 93. What's counting in the rand's favor at the moment is that in spite of this continued resurgence in the dollar and dollar strength, we are seeing that the way that the local government elections have been playing out has sort of reinvigorated a bit of sentiment around the local market. Of course, we are not doing in the best of shape following our interest rate hike, and that is largely off the back of a comparative view on what is happening in Turkey. Turkey had done something similar where they had hiked interest rates a lot earlier, and as a result now they've gone back and sort of reversed that process, and that's what's causing the Turkish lira at the moment to suffer quite a bit. And it remains to be seen whether or not, from a South African perspective, the same effect will be seen on the rand, but we could very well reach 16 rand before the end of the year.
And oil prices dipped in early trade, while a robust dollar seems to be keeping the gold below the 1,800 US dollar an ounce mark. What are some of these elements driving these commodity moves?
So on the oil front, a lot of what's happening is centered around President Biden and the U.S.'s recent conversations around oil. The U.S. has come out to say that they are looking to release around 50 million barrels of strategic reserves in oil in an effort to lower the oil price and the gas prices in the U.S. Gas prices in the U.S. are about 60% higher than they were this time last year. And so the U.S. has gone on a drive to sort of get other nations involved around this. They've approached OPEC, but the OPEC plus countries have said quite firmly that they are not interested in lowering their pricing or in increasing excess supply reserves at this stage. So the U.S. is in talks with countries like Japan, China, South Korea, and India. And these countries have all pledged, I believe, about 5 million barrels from each of their own reserves in an effort to reduce the pricing from the oil side of things at the moment. So that is a lot of what's driving oil sentiment at this stage. From a gold perspective and other commodities, other precious metals, it's likely to be, as we mentioned earlier, around those U.S. Treasury yields. As those yields continue to rise, we have seen that gold has gotten weaker, but that coupled with the increasing dollar strength that we have seen in recent times following the confirmation of tapering. When the U.S. sort of came or sort of cemented their tapering plans and sort of announced that through, we started to see that a lot of the market pricing from a dollar perspective started to happen because of that expected interest rate hike that could be seen as early as next year. So a lot of the gold price at the moment is being driven by dollar strength coupled with the U.S. Treasury yields at the moment.
Now, Jimmy, the proposed buyout of minority shareholders in equipment manufacturer Ball Equipment by the company's founding family trust has failed. Let's talk a little bit about what happened there.
Sure. So, I mean, the Bell Family Trust had announced in October, I believe October this year, that they were looking to offer some of their minority shareholders a 10 Rand a share on their Bell shareholdings in an effort to sort of buy back all of the shares and then delist Bell subsequently. But at the time they made the offer, the share price alone was trading around 29% higher. It was trading at about 12 Rand 90 at that time. And so that offer alone, when it was made well below market valuations at that time. And if you look at the net asset value of Bell, we were seeing that there was a point where the net asset value around June of this year was sitting at around 37 Rand a share. So the minority shareholders, I mean, Sanlam and Alan Gray collectively hold about 8% there. 91 is another shareholder there on the minority side. So the 29.45% of minority shareholders have sort of said that the 10 Rand a share offer is not exactly what they're looking for. They're not happy with that. From the Bell Family Trust side, I think it's definitely not what they wanted to hear, and it's definitely dampening their plans to sort of delist the company and move away from where it is at the moment.
And Lewis Group published its financial statements for the 6 months ended 30 September of this year. How have they fared in the period under review?
So they actually performed quite well. Their revenue numbers were up. Their operating profit was up about 23%. Revenue was up about 12%. Operating margins up about, gross profit margin, sorry, up about 40%. They did, interestingly enough, say that they do have a large number of stock or excess number of inventory on hand ahead of, we know what's going to be a very busy time for them now with Black Friday coming up. So from their perspective, they've actually managed to position themselves quite well to take advantage of the global supply chain shortages we're seeing that are affecting everybody. I mean, we're also seeing container shortages affecting the local ports and the ability to get new stock into the country. So their inventory levels at the moment are standing them in good stead ahead of the expected influx that they're expecting to see. But they've also done a couple of things. They've reduced their net debt by about 16 million Rand over the period. They've also improved their debt collection. They've reduced their debt turnover rates and that sort of thing. Their debt default rates as well are down. So from a collections perspective, they've managed to collect more of their debtors' book, and they've managed that quite well. They've also kept expenses sort of under wraps and in check. And because of the inventory levels they've got, they're expecting that they'll be able to have an improved sort of second half, particularly with the December and Christmas rush that they're expecting to see from their side.
Very well. Let's leave it there for now. Thank you so much for your time. Jimmy Moyaha, independent analyst there, giving us a sense of how the markets are faring and the latest in the world of business.